Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about AMERIPRISE Financial INC quarterly report. AMERIPRISE Financial offers a diverse range of financial services and products through three main segments: advice and wealth management, asset management, and retirement and protection solutions. The company provides various services including financial planning and advice brokerage products and services, investment advisory, accounts, mutual funds, insurance, and annuities products, cash management, and banking products. Additionally, AMERIPRISE offers investment management and advice through its asset management segment, which includes U.S. mutual funds and their non-U.S. equivalents, exchange-traded funds, variable product funds, underlying insurance, and annuity separate accounts, institutional asset management products, such as traditional asset classes, separately managed accounts, and hedge funds. The company also provides variable annuity products and life and disability income insurance to retail clients through its retirement and protection solutions segment. AMERIPRISE Financial Inc.'s stock price decline. A year in review. Over the past year, AMERIPRISE Financial Inc.'s AMP stock price has experienced a decline of -9.79%, with shares losing approximately 11% of their value. Several news-driven events have contributed to this downturn, including concerns over Q3 earnings, a weak jobs report, decline in client net flows, legal setbacks, and post-earnings volatility. The company's resilience was tested by investor fears regarding potential Federal Reserve rate cuts and their impact on cash revenue. A weaker-than-expected U.S. jobs report also caused investors to reevaluate AMERIPRISE Financial's outlook amidst concerns about an economic slowdown. Furthermore, a significant decline in quarterly client net flows led to a negative market reaction. AMERIPRISE Financial faced setbacks in legal battles, particularly in recruiting against LPL Financial, and cautious hold ratings were issued by analysts. The company's ability to surpass earnings expectations was overshadowed by investor concerns extending beyond the quarterly results, possibly encompassing potential changes in interest rate policies and higher client cash levels. These individual events, coupled with broader market sentiments and investor concerns about economic conditions and interest rate policies, have collectively contributed to AMERIPRISE Financial Inc.'s negative stock performance over the past year. The primary drivers of revenue growth or decline can be summarized into several key areas. Revenue growth is primarily driven by increased management and financial advice fees, net investment income, and market appreciation. These factors contributed to a 8-14% increase in management and financial advice fees, a 13-18% growth in net investment income, and a significant boost from market appreciation. On the other hand, revenue decline can be attributed to net outflows, higher performance fees in prior years, lower average invested assets, and unfavorable impact of lower investment yields. These factors led to a decline in management and financial advice fees, distribution fees, and net investment income. In terms of expenses, general and administrative expense decreased due to operational efficiency initiatives and higher performance fee-related compensation. However, interest and debt expense increased significantly due to higher interest rates or other factors. Overall, market fluctuations, changes in interest rates, competition from larger competitors, investment management performance, talent attraction and retention, and sales of unaffiliated products through third-party distribution channels also play a role in driving revenue growth or decline. The net income of a company experienced mixed results in 2025. While some sections reported a significant increase, such as a 34% rise to $3,626 billion, others showed a decline or no substantial change. The overall trend suggests that net income decreased by 44% from the previous year. Profit margins also underwent changes, with some sections indicating a decrease of up to 40%. However, other sections reported an increase in profit margins, such as a 27% rise in return on equity (ROE). The reasons for these fluctuations can be attributed to various factors, including increased net trading losses, investment performance and interest rate fluctuations, management fees, and changes in net investment income. The company is generating a significant amount of positive operating cash flow, with net cash provided by operating activities totaling $1,234 million for the 9 months ended September 30, 2025, as reported on page 1. This figure is further supported by an even higher total of $5.7 billion, also for the same period, as stated on page 174. These numbers indicate a substantial and consistent generation of positive operating cash flow, demonstrating the company's financial health and stability. The company's debt level has experienced a significant increase of 8% in total long-term debt, rising from $2.842 billion to $3.077 billion between 2024 and 2025. This growth is also reflected in the increase of long-term debt by $235 million, 8.6%, on page 5. However, the interest expenses have shown mixed results across different pages. While some sections indicate a decrease or stability in interest expenses, others report an increase. The most notable change is the 43% increase in interest and debt expense reported on page 162. Despite this fluctuation, total interest and debt expense remained relatively stable, decreasing by only $2 million, minus 2%, from 2024 to 2025, as mentioned on page 170. Overall, while there are conflicting reports on interest expenses, the company's debt level has increased significantly over the past year. The company's financial performance varied across different segments. The advice and wealth management segment stood out as one of the top performers, with both total assets and adjusted operating net revenues increasing. Asset management also showed improvement, with stable total assets and increased adjusted operating net revenues. On the other hand, retirement and protection solutions was a poorly performing segment, with total assets growing at a slower rate than the previous year and adjusted operating net revenues decreasing. Distributor fees were another high-revenue segment, but no specific performance metrics are provided for this area. Management is optimistic about the company's outlook, citing several key areas of focus. The company plans to continue focusing on its strategic objectives, leveraging its core capabilities for operational and strategic gains. It aims to capture additional growth opportunities with its financial flexibility. The advice and wealth management segment has shown a 3% increase in pre-tax adjusted operating earnings due to market appreciation and advisor productivity. The company expects to grow its client base, increase financial advisor productivity, and retain clients. Management is also confident in the company's risk management strategy, citing access to collateralized borrowings and estimated borrowing capacity under FHLB facilities and Federal Reserve. It believes that its credit protections would be respected even if Genworth Life Insurance Company becomes subject to rehabilitation or insolvency proceedings. Despite rising interest rates and their impact on investment portfolio yield, the company aims to deliver on its strategy. It will prioritize individual client relationships and investment performance to drive revenue and net income. The company has demonstrated its commitment to returning value to shareholders through both dividend payments and share buybacks. In terms of dividends, the company paid out significant amounts in 2024, $3.2 billion, and 2025, $2.9 billion, indicating a consistent policy of rewarding investors with cash distributions. Regarding share buybacks, the company has also been active in repurchasing its own shares. In 2024, it bought back approximately 2.012 million shares, while in 2025, it repurchased a total of 3.7 million shares at an average price of $512.03 per share. Overall, these actions suggest that the company is committed to maximizing shareholder value through both dividend payments and strategic share buybacks. That concludes the financial summary for AMERIPRISE Financial INC. Feel free to comment below, and I will be happy to answer them when possible.